Hey everyone, welcome back to my channel. I recently found Volland, which is a tool centered around deep dealer positioning insights, and wanted to make a video to show how I've been using it to make decisions on options plays. This is probably the simplest way to use it, and I will cover more complex uses of it in the future. However, I'm really blown away by the power of this tool, and I'm excited to keep digging into it further. Before we get started, I'll leave several discount codes for trading services I use in the description, including Sonar Labs, TradeEdX, Voland, and Elite Trader Fund. Lastly, if you enjoyed this content, don't forget to like and subscribe to help me grow this channel. Really does help the channel grow, and it means a lot. With all that being said, let's get right into it. So the first thing I want to do is point out why I'm going to be talking about Apple and why it's of interest to me today. So I'm on TradeEdX.com, and if we go to the Apple options summary and we scroll down here, one thing that really stood out to me was net flow and this large put spike at the end of the day. And I've done lots of videos on TradeEdX. I love their flow tools and even some of the dealer insights you get from TradeEdX. And I've covered net flow and market net flow in great detail, so be sure to check those out. And I've also covered videos on how to use their Discord to assess tickers quickly. But this really stood out to me, which shows a lot of put buying that happened on Apple end of day on Friday. So today's date is actually Sunday, November 20th when I'm recording this. This will likely be released on Monday afternoon. But so I wanted to assess this further to see if Apple was presenting a viable setup for shorts. And so one thing I always do is I always look at the chart. Now, just to show what I'm using, I have periodic volume profile, I have the VWAP, I have Sonar Labs multi-time frame support and resistance, which is these gray levels that you can see on my screen here. And then I have the smart money concepts from Lex Algo, which is the free smart money concepts indicator. I do like Sonar Labs better, but I know a lot of people want to use smart money concepts indicators, and this is a fantastic free one if you don't want to pay for a premium one like Sonar Labs. So we can see here that Apple was in this downtrend, and recently there's been a lot of buying, and it's been happening market-wide. Really, there's been a big rally. And there was a big rally end of day Friday because we had a major OPEX event. So a ton of options were expiring off, and a lot of negative deltas rolled off the market of somewhere over 5 billion, which led to a fantastic move of the upside. However, now that OPEX is over, there's no more put protection below, and that's pretty much market wide. And I want to determine how market makers are going to influence Apple and other tickers that I'm always interested in. I always trade futures primarily, so I always trade ES and Q and YM. However, I'm always also interested in a lot of the bigger names that drive the future indices to trade options on those while I trade futures. So I always like to look at Apple, Microsoft, Tesla, Google, Amazon, and those big names, and also big names for YM as well. So Apple's always one of the first ones I check. Not to mention, this divergence was actually picked up. So if we look at the algo flow divergences on TradeEdX, which you can get from the Discord, we can see that this Apple divergence was shown, the flow diverting from the price action, which called that out. And this is always a great way to get an initial watch list to pour through. So looking at Apple, we have this big put spike, and then if we scroll down, I've shown this stuff before, and we can look at correlations here. So if we look at how Apple's behaved in the past, if we want to get an idea of how it will behave this week, we can set this to 5 days, and we can look at we want to look for strong correlations down here. So we can look at Gamma and Vanna and Charm, and we're not really seeing any major correlations that are worth playing off here. So I need something else to help me get some deeper insight into dealer positioning. Of course, we can see gamma exposure at certain levels. Now we can see that Apple did close at 150.88. So what I'm going to do here is I want to see, so we have this big order block up here on Apple that caused this is the 15-minute chart. And we had this big move down, this change of character was caused here, and then that's what kicked off the downtrend. So we're getting to a point, we've already retested it once and we had a strong rejection, which led to another order block being formed. So we're getting to a point where we might retest this order block again. And that's what I want to see, is if we get up to around 152, that strike, how's the market going to react? So if I go to vol.land here, I'm actually going to first start with the institutional Greek exposure. Actually, before I get into that, let's since that we have to wait for that page. Okay, there it goes. So let's look up the institutional Greek exposure. Now we can see here this is delta adjusted gamma. This is actually very similar to SpotX on TradeView, and we can. But one thing that's nice here is we can see how this is influenced. So at 150, it looks like we might have a nice run up to 152, 155. At 155, we'll see some resistance, most likely, purely based off gamma. And then if we do break 157.5, we'll have a clean run up to 160. We can go over here and we can see the largest gamma levels. So 160 is that large gamma level. And then we can go here and we can see 155, 150. And those are what we would expect in those $5 increments. We typically have a lot of gamma, but I want to look for areas where there's a lot of VANA, which can typically result in a magnet. And a lot of times this VANA will cancel each other out. So we do have this 160. All this VANA is way out of the money, so we're not really going to pay attention to that. Now, if we zoom in here, there's not a lot to pay attention to here. So not getting a lot out of this particular chart, but what's really awesome is if I go here to the dealer hedging requirement summary, and we'll let this load. This takes all the gamma, VANA, and charm for us, gives a little explanation of what this all means, and shows the market maker hedging requirements at these price levels. So as I mentioned, if we flip back to Apple, we're currently at 150.88. I want to know what's going to happen as we push into this bearish order block. We already know that institutional money will likely short Apple here, will likely sell Apple here because they've done it in the past and it's already been tested once and had a nice little sell off. Now we do also have buying here, which is something we can check out around 150. So I want to know how market makers are going to assist this move. Of course, market makers aren't everything, but they do play a significant part. And if they're in line with what institutions are doing, it can lead to some major selling or buying. So we'll look at first what market makers are going to be doing at 152, and then we'll look at what they're going to be doing at 150 to see if this bullish order block and fair value gap down here will likely hold. So we can see that on Friday, Apple had $16 billion traded on it the whole day, just to give an idea of how much money was traded on Apple. Now that's the whole day. We can see at Apple's current price at 150.86 that market makers, in order to account for all the gamma, VANA, and charm that are current, and I've done a video about gamma, VANA, and charm regarding options Greeks and the secondary Greeks and dealer hedging and positioning. Definitely check that out if you're not sure what these mean, but this also does give a nice explanation. And we can see that right now they're short negative $257 million. Now compared to that 16 billion, that doesn't seem like a ton, but that can be rather significant shorting at this level. So we know that market makers are short when Apple's at this level. So if we bump this up to 152, notice how as I did that, how their requirements shift. So now they have to short 285 million at 150, almost at 152 here. As we get to 152.8, shorting 316 million, and that short requirement actually starts moving down once we get closer to 154. Let me just make this a whole number to make this easier here. So at 154, we have 313 million that they're shorting, and then if we keep pushing past that, yeah, they keep shorting here. The shorts keep adding up, so it means market makers are going to be resisting that move. However, this is really interesting. Once we get to 159, all of a sudden market makers start buying, which is sort of what we could see with on the delta adjusted gamma chart that we saw before. We could see that around 160, if we started pushing up there, we'd get a lot of support and a big move higher, and that was purely from a gamma perspective. This is nice because it's showing us from a gamma, VANA, and charm perspective. And so at 159, 160, all of a sudden market makers go from resisting the move higher to supporting the move higher. But regardless, at 152, we know that they are with institutions and they are likely to short in this whole area from 152 to 153. So if Apple does push up here, based on the flow that we saw, based on the chart itself with smart money concepts that we're looking at here, and based off of the market maker dealer hedging requirement summary, we know that there's likely going to be selling that occurs here. So this would be a perfect put buying opportunity on Apple if we get in here and we see something like this. Now, of course, we'd probably want to drop down to a lower time frame to look at it to get a much easier view of what's actually happening as we push into that to try to optimize our entries here. But most likely we'll see the same thing that we saw here, which is a nice rejection. Now let's see what happens though. If we do push up to here and we get that rejection right in line with all that put flow we saw, and Apple starts moving down, what happens around 150, 149, 150? Well, let's see. So if we drop this down, notice how their hedging requirements are shrinking at this point. So they're still shorting, but they're not shorting as much as they were when price was higher. So as we get down to the 150, they're actually still shorting with that move. And then this is really interesting is as we push down to 147, 146, 145, they actually short even harder. So what that essentially is telling us, if Apple comes up here, we'll likely have a rejection based off of the chart, based off the flow information we have, and now based off the dealer information we have. And then when we get in here, yes, there will likely be some support. But if we break this and we get and over here I have volume profile set to weekly. So really right around the point where we get to that weekly value area low, if we break that, market makers are actually going to accelerate this move lower. They're going to sell into that move and help drive this thing lower and lower. And why this seems like an even better setup to me is because we had the major OPEX event, so there's not a lot of downside protection. And if we go into what's happening this upcoming week, so this is Market Watch where we can see market news. We can see on Wednesday, November 23rd, we have jobless claims coming up. And then of course we have FOMC minutes, which really will determine everything. So leading into Monday and Tuesday, most likely we'll see a little push higher. Then we could see a rejection here and a push down. And then depending on how it goes, as if they're setting up as if the market will be prepping for that news from Jerome Powell to see if he's hawkish or dovish. And based on what he says, if he gives a 50 BPS rate raise, undoubtedly it's just going to override everything, and there's going to be a ton of buying that occurs, and there will be a nice rally. But if he's hawkish, then it could help push us past that point, that this little bit of support that we have here, and market makers can actually help accelerate that lower. Now, it is very dangerous to hold through an FOMC minute, so I wouldn't recommend doing that. But at least I just want to show how you can actually use vol-in to get that market, that dealer hedging requirement, and determine if an order block or an institutional short position will have market makers assisting it, or if they're going to be going against it. And in this case, this zone will have assistance from market makers when it comes to shorting. So I hope you found that as interesting as I do, and can use that to your advantage if you are a vol-in subscriber to make informed decisions like that. There's so many other ways to use it with option spreads and stuff like that, which I'll get into very soon. If you don't have vol-in and you're interested in checking it out, you can use my coupon code in the description to save 15 bucks a month on it. But yeah, if you have any questions, definitely let me know, and I'll be covering this stuff soon. And I'm going to start trying to maybe at the beginning of the week put out a list of my top 2 or 3 favorite plays for the week, or at least early in the week, because things can change dramatically as the week goes on. And we can use things like flow data, macroeconomic events, and market maker data like we just showed to make informed decisions, along with the price action and the chart and smart money concepts. So I appreciate you watching, and I hope you learned something.